Happy Sunday, everyone, and welcome to this week's edition of the Weekly Look Ahead. This is your Sunday newsletter, and it is designed to get you prepared for the week ahead. As always, it's your one stop guide to everything you need to know heading into the market this coming week. We'll cover the top stocks, key news, and strategic moves to keep you ahead of the game. So, as always, check out the stocks to watch section of the newsletter today and be ready for another potential market jolt on Tuesday or Thursday with key economic data scheduled for both pre and post holiday trading. Now, I have three stocks that I'm going to look at really quickly. And unlike our usual format, this time I have actually gotten some contracts for you. And the contracts that I've chosen are based on my trade allocation plan or my capital allocation plan that is a part of my overall trading plan. And so I'm pretty sure that if you subscribe to anything options trading related for the remainder of this month, you will get a copy of my trade allocation plan. You'll know just how I structure my trades and structure my accounts so that I'm collecting money at 3 month, 12-month, and 18-month intervals, and also in the short term. So we have a little bit of each kind of contracts for you today. But the three stocks that we're going to look at are probably some that you have not heard of. And so the first is, and this is also a training, so we're going to do some top-down analysis on this stock. I like to start at either the daily or the weekly chart. As the members of my mentorship know, and I tend to keep it kind of simple. And so I'm going to draw my Fibonacci from a low to a high on the weekly time frame. Just going to check things out here. Our stochastic is bearish. It's at the 50 level. The 50 level is an area where we often see um, price turn around. It is also at the 50 Fibonacci level, which is another area where we often see things turn around. This is my 50 moving average, which is another area where it's quite possible that we'll see things turn around. But let's start our top-down analysis on QSI with the daily time frame. And I'm going to take you all the way down to the hourly chart or perhaps the 30-minute chart to show you what setup you'll be looking for during this short trading week. Remember, of course, guys, that we are closed or the market is closed for Christmas on Wednesday, but every other trading day, there will be regular trading. And so immediately on the daily, I see that I'm oversold on my stochastic and that it is turning or flattening in an early attempt to try to return to bullishness. The other thing that is significant here is we have reached this is technically our second profit target area before a strong retrace. That was probably spawned by some kind of news, but this expansion on the 12th is good news for this stock. So let's see what trading on the 12th looked like. Okay, we were already deep into our retracement by then. But what has happened is we've stopped like kind of on a dime right on our 50% Fibonacci level and our 200 daily moving average. And those are both two very, very strong support or resistance areas. The other thing that members of my mentorship know is that if your moving averages are clustered together like this, that will usually present some type of explosive move. And so we take a look. Our next profit target is $3.17 on this stock. So let's continue our top-down analysis. And I do believe that based on my good friend Russell, he might consider this a cup and handle. But what I see is something slightly different. And I'm going to, based on that, move my stochastic from a new lower time frame high to low, not my stochastic, my Fibonacci, from a new lower time frame high to low. And what you see again is price has found support at a 200 moving average. Now, this is the 4-hour 200 moving average. The three moving averages, 200, 21, and 50, are clustered together here again. And your stochastic is more advanced in its bullish reversal than it was on the higher time frame. And what typically happens is you start to look for reversals instead of going from the top down. You look for reversals from the bottom up. So, accordingly, what is happening on the 15-minute chart is telling you what's to come on the 30-minute chart, and what's happening on the 30-minute chart is telling you what's about to happen on the hourly chart, and so forth. So, let's drop down to the hourly and see if we can start to define a setup or see some type of chart pattern. To me, this is looking like a triple bottom forming. Again, we're on a combination. We're at our 886 fib level, which we call in the mentorship the rocket launcher level, with two moving averages clustered together, and that is significant. But let's drop down to the 30 and see. Yes, to me, this triple bottom is slightly more defined here, and my immediate profit target in the coming week, considering we have a short week, would be this 200 moving average. But a longer term profit target would be the 50. And then, of course, a full retracement up to $3. Now, with that said, according to my trading plan, the best way to capitalize on a stock like this, and you can do your own research on what they do in their financials, and that is very easy to do by just clicking on the name of the stock below your watch list. And I'll show you how to do that. But in the meantime, the contract, so you can click on financials, and these are very easy to read. I actually love how they display the financials on TradingView now. And then if you want to know what they do and what you're getting into this leap on, just come in here and read the company description on the overview page. But the contract I have selected, which I think is the smartest choice, is a $2 strike price call for January 2026. And so this is not investing or trading advice. I am not a financial advisor. This is simply something that I'm looking at, and I will probably be getting into in the coming week in preparation for the Santa Claus rally. The next stock that I want to look at, and we may only do two today, as we kind of defining what we're doing on Sundays and try to make it more valuable for you guys as we phase back in slowly our daily free newsletter. Right now, you can look for your newsletters on Sunday and Wednesday. And so I've already drawn a fib here on the monthly. So we will just work with this fib. And again, what you see on your highest time frame is that we are oversold and the stochastic is flattening. Just peek at the weekly really quickly. See if there's anything worth noting. Now we could certainly, I will hide this fib and draw a lower time frame fib on this smaller move. Just drawing it low to high from the most recent low to high. Okay. Daily chart. All right, we're oversold, completely flat, and we have this small, bullish, almost doji-like candle. We have some significant bullish divergence. If you guys don't know what that is, hop into the mentorship. While it is still discount priced, it is $200 a month. I will tell you a little bit about what it includes. But we definitely have some divergence. Our moving averages on the daily chart are bearish, But we will look at the lower time frames to see if there is any indication of a potential change in direction. Okay, more divergence. Um, let's say slightly more bullish stochastic on the 4 hour. Uh, lower lows. This is looking like, so my expectation is that we'll trade up into the 21 moving average. But let's see if we will go any further than this. This is another stock. It was in my, I think, biogenomics report about 3 years ago or so. So this is one that I have been looking at since then. Let's see. 3 years ago would have put us at 2021, 2023. All right, I'm not going to go back that far. On the hourly chart, we have a well advanced. I always tell in my mentorship, they know that the first sign of a reversal is when price crosses the lowest moving average on the lower time frame chart. So here you have a cross of the 21 moving average on the hourly chart, which is wonderful. And now I want to check to see, because the stochastic is telling me that we're going to form some sort of double bottom here. But I want to look at the 30-minute chart to see if there's an additional signal of the two lower time frame moving averages actually crossing. And we do have a crossing of those moving averages. So my expectation now, with the two signs of reversal on the lower time frame, would be that we will trade up into this 200 moving average, and then possibly trade off. This is a inverse head and shoulders, shoulder, head, shoulder. And so it may come down and like fully form a shoulder, finding support here, wick below here, but find support here before it heads up to the 0.886 Fibonacci level. But let me see what it has done at this level. What you guys are going to be looking for is you're going to be looking for an entry into the January 2026 $80 call on this, because the price target, and you'll have, of course, a year for this to materialize, but the price target on this, most certainly over the course of the next 12 months, is first profit target would be 106, second would be 117, and the third would be 144. More divergence here on the daily. So I would wait for a potential entry off of the 1 fib level. And if it does not give you that, if it finds support or it retains the support here at these moving averages, the 2150 cross there on the 30, or if it breaks the 50 on the hourly chart, wait for a retrace and then take the $80 call for January 2026. It is an absolutely safe bet. It has good implied volatility, great delta. And again, there's plenty of time. If you happen to get in 50 or 100% profit, you can roll out of that contract, which is the way to take some of your profit, secure some of your profit, and remain in the contract. And so I wasn't actually going to look at this third one, but I will, because it's a shorter term contract for February. And I want to give you guys kind of the full perspective and the full experience of what trading my capital allocation trade plan looks like. So we're going to quickly look at Grab. Grab is a Chinese stock that I happen to like, but right now it is on a decline. So on the daily chart, you can see kind of this almost double top here. On the daily chart, we are oversold. We are also at the 618 Fibonacci level with a doji and a green candle, but I don't think that we are quite done. with our retrace here unless some significant news comes out. So I would expect that at a minimum on this 4-hour chart, after some bullishness, we would return, or we would seek to find support at the 200 moving average and the 618 Fibonacci level support before any possible reversal. So again, guys, that is, I do expect it to trade up, but then I expect it to fall back down to the 200 moving average. So of course we are looking at a put when that happens, and it will be an in the money or an at the money put depending on where it lands. But let's see. What we see here is something that I often talk about in the trainings and the mentorship, which is that's a double top. And then you start to see lower highs. So there's a high and there's another high, but this high is lower, and lower lows. So here's a low, that's a high. Here's a low that is lower than that low, and another lower low, and another lower low, and another lower low. Now, what gives me the confirmation that we will have some resumed bullishness before we continue to trade lower is that this is, number one, this is a major support, the 50 Fibonacci level. You have a lot of consolidation in this area, and it acted as resistance before. But this is another head and shoulders, inverse head and shoulders, or triple bottom pattern. And so my expectation now is that we will trade up into the 200, and then that will create the opportunity for us to buy the February 21st, 2025 put. Again, this is not a recommendation. I am not a licensed financial advisor. These are just things that I'm looking at. You are to day trade. You are to, I haven't done it, so I don't even know what it's called. Demo trade. There you go. You are to demo trade these, if anything, just to test the strategies and see if the indicator combination that I use is a good fit for you. If it is, you may want to consider the mentorship, but you are not to take live trades. I am not a financial advisor. This is not financial advice. But if I were going to demo trade this, I would wait for a touch of the 200 moving average or very close to it, and a wick off before I would demo trade a $5 put with the expiration date of February 21st, 2025. We'll just look at one last. Okay, so the possibility here, we are certainly preparing for an explosive move, but this perspective kind of presents the possibility that that moving average is at 506 versus, it's negligible, so like 11 cent. So somewhere between 506 and 518 in that area. But once you get that sharp bullish move, you should start to look for double tops, triple tops, divergence, indications of your opportunity to take that demo trade put. And that will conclude the technical analysis portion of the video. Are there any announcements? If anyone is interested in getting started with the Forex EA, I would do that before the webinar that is scheduled for the 28th, because I have a feeling with the amount of responses that we've gotten and registrations for that Zoom, that it is going to create a backlog next weekend. And of course, everybody will be moving slower and working less over the weekend, particularly a holiday weekend. So if you know that you're interested in getting started with either the indicator or the auto trader, I would take advantage of that now. If you need the link, please reach out to me or to Rochelle, and we will provide you with the link and give you some instructions on the things that you need to do to actually get moving with that stuff. And with that said, guys, happy Sunday, and I'll see you in the markets.